If you trade trend lines, you're clearly familiar with the situation where the price breaks the trend and rushes to continue the trend. You have no way to control the price and you start using Fibonacci and other tools. An equally common situation arises when inside the channel, seemingly while we're tracking the price hangs around the middle and you don't really know what to do, where to buy, and what's going to happen next. In this video, I'll show you a secret tool, the Andrews Pitchfork and Schiff Pitchfork, which I use in my work. They'll let you control dynamic movements when the price leaves the channel, as well as control the dynamics and corrective movements until the moment they reverse. With the pitchforks that hundreds of my clients use, you'll finally be able to earn stably and consistently. If you're interested in quickly and effectively boosting your trading, turn it up and watch this video to the end. The problem isn't that trend channels don't work or that you're using them wrong. No, it's a very cool tool, and any trend lines or channels, if we combine them, are the basis of any price action. And it's been proven worldwide, and most traders use this method to earn consistently. But there are a number of gaps where trend lines perform worse. And here are a few examples for you. We'll be looking at the real market. This is gold, where everything looks great when drawing a trend line. Great. Several times the price bounces off the boundary and heads further to continue the trend. In the same way, we can build a channel through the opposite point. And it would seem after exiting our channel, we should have a reversal, that is, a change in trend. A sideways trend, how do we control this sideways trend using a channel? Let's see if there's some kind of pattern here. Actually, if you use a channel in such constructions, we'll often notice that the price seems to be moving somewhere in space, meaning there are no support or resistance points. But the most interesting part happens next. That is, if we continue this sequence, you'll see how many inconsistencies can occur in the process. Why do we slightly break through the middle? Why don't we exit the channel immediately? Why do we get consolidation? How do we control this point that's happening here? Because the next channel construction will practically not give us that opportunity. So we touched it, bounced off, and started moving further. Where will it stop again? Will it be in the middle? Will it be at the end? Today, I want to show you a tool with which you'll be able to control absolutely everything. And look at how it looks. We'll be able to control the weak movements that are developing. We'll be able to additionally control any correction that occurs and understand its targets, in addition to the classic constructions we can perform. And we can do this with every single price movement, understanding why the price is exactly in the spot it stops for us, and then a reversal begins. Even in seemingly hopeless situations where a classic channel can't control the price, I'll teach you to do it most effectively using pitchforks. Let's start from the beginning and I'll show you which tools we'll be using. Let's go to TradingView and we're going to use two tools. These are Andrews Pitchforks, which are simply called pitchforks, and the Schiff Pitchforks that I use, which are called modified Schiff Pitchforks here. Let's imagine a situation where, in the classic sense, the first movement and first correction occurred from a reversal. So we have 3 points that we're usually accustomed to using to build a price channel. So we would build the channel in this way. Instead, we're going to use pitchforks. Andrews, which allows us to control absolutely everything in the event of a dynamic movement or impulse. The price will pass through each element in the process and, upon breakout, give a signal to move to the next level. However, if the movement is shortened or corrective, we'll use a classic construction that's 100% identical to a standard price channel, but with extra Fibonacci levels at 38, 50, and 62%. And the first question you'll ask me is how to set up the pitchforks so they work just like they do here in my video. Let's go into the settings and take a look at the parameters. We need to have a 0 point set. That's where the price begins. 1 is the middle of our channel, which represents 50% and the 50% median. 23.6 corresponds to the 38 and 61.8% Fibonacci levels. I won't go into the details of how I calculated that, but you can just use these ready-made values. Accordingly, in this case, when plotting Schiff pitchforks, we use the exact same settings, 0, 23.6, 0, and 1. You might have seen the 1.1 parameters. You can set those aside for now, as I don't recommend them for beginners. So once we finish plotting, and pay close attention here, from 3 points, we always create 2 plots, Andrews and Schiff pitchforks, so that initially, based on the dynamics, we can decide which movement is developing. If during the formation of the first correction, we see a move toward the Schiff starting line, that is the initial boundary of our Schiff pitchforks, then, in this case, it's highly likely that the movement will be weak and will develop within our first set. In that case, you can delete the second one until it starts working out. If, however, our first move ends at the boundary of the Andrews pitchfork, meaning the maximum is reached in that same area, followed by a correction to the Andrews starting line, then we look for something more dynamic, either toward our median channel or with the potential for further price movement to the final line of our plot. Consequently, this gives us the ability to monitor the movement based on the dynamics and what's happening in the market, and to make decisions on the fly without redrawing or creating dozens of channels and other additional tools. So let's see in practice how this is going to work for us here. Well, to make it more interesting, let's switch over to another instrument now, like silver, and see how it works on silver. We can take the last part and, well, yeah, let's start from the very beginning. We have a low, a high has appeared, and we have our first correction. All right, let's go. We're plotting the first one, setting up the Andrews pitchforks, and we see that during the first correction, the price moves outside the boundaries. This is the groundwork for the formation of a weak movement in which we'll need Schiff pitchforks. This is what they look like. You can calibrate them to a prominent extreme so that the first correction doesn't break through our extreme. And we get a working setup where a breakout means this set of pitchforks is done. The cycle is over and we need to build the next one. So as soon as we build the next set, we use the same extremes we calibrated from. If we did that, our calibration and the next pitchfork setups allow us to define the target zones. So just so you understand, if we build volume zones right up to the extreme where our pitchforks actually started, we'll get more or less the same zones. In other words, what I'm saying is that the Andrews and Schiff pitchfork tool allows us to strip our toolkit down to the minimum and evaluate any market as quickly and effectively as possible. So once a new extreme is reached, we just use a new setup and track the price based on how things are developing. Here's our first move, and here's the stop. So we always know that after hitting a stop, we should return to the initial signal line, the initial Andrews line, or the stop will occur at one of our Schiff pitchfork levels. Notice the price action inside, and the boundary supports us from below. So naturally, we move further along. And that's how we fully control the subsequent movement, including what's happening right now. If you think some markets behave differently, let's see how it works with crypto. You'll see the exact same thing here, right down to the current moves that are unfolding. The 3 extremes we're going to use here look like this. Once our price tests the initial Schiff line for the first time on the first correction, we're looking at a weak move. So we focus on this set and primarily on the next level that we have. It couldn't break past the median channel, which means a new cycle begins, which we track using a new set. And voila, we have the targets for our move. To track the next move, we simply redraw the pitchforks. And that lets us monitor the price up to the present moment. If you, like me, have seen the value in this tool and realize how cool it is at predicting future extremes and price dynamics, subscribe to my channel below this video, where I find signals in practice with real examples and trade-specific deals, sharing it all with my subscribers. And now it's time to show you how you can use pitchforks in a real market, potentially finding zones where an entry signal might be forming. Let's head over to oil and take a look at the latest events that have been unfolding there. After a minimum was formed, we saw a prolonged movement followed by a correction. The first conclusion I wrote about on my channel was that the dynamics we're seeing in oil right now raise some questions. Why does it raise questions? Because the first correction that occurred moved out of the pitchfork, and consequently, the dynamics were moving along the channel. Most often, this leads to a further decline. We figured that out, went into correction, no one lost money, and thanks to the pitchforks, we were able to stay on the sidelines. We had our upper boundary. Accordingly, the price moved lower. The price and its limit could be monitored using the minor set. And as it moves beyond those limits, we understand that a reversal has taken place. Okay, here we ask ourselves again, what if we're working on a new high and the price starts moving upward again? We build the next set of pitchforks and see that the dynamics aren't impulsive, meaning a correction is developing here. And the very first situation makes that clear. So in this way, even if you had questions and later calibrated your setup, then on the very next decline, right here or right here, you start to wonder if something's going wrong. But where exactly are the signals formed? Let's discuss that and take a look. Let's use our last trade as an example, which we opened right here at the breakout of our sequence. We set up the pitchforks. We see the price stopping at the median right in the middle of our setup, so we build the next set. Here we get a breakout and a signal that the price might start moving in a downward direction. Some thought we might reverse upward, but not the pitchforks, because with this setup, they indicated weak movement. Look, if I plot Andrew's pitchfork, the price immediately moves outside the boundaries. That means this movement is exhausted. And so we get a reversal. This is the exact point where we see the downward signal. Now we just need to find our targets and why it might stop here. We take the last three extremes, connect them, and find the point where the price comes to a halt. Accordingly, we monitor the current price movement in exactly the same way, using the pitchforks. The price broke out, so the upper boundary is now our base, the nearest resistance where we might stop. Next, I need to show you, and pay close attention, how to get an early reversal signal and close your trades effectively. This can also be done using pitchforks. And here we'll look at a classic example of how the price develops and how it's formed. This is important for any pitchfork set, whether it's Andrews or Schiff's. It just depends on which set we choose. So we were trying to develop, and we only consolidated in the first half, and I'll highlight it specifically for you so you can see it clearly. The first half, meaning from the start where the price began to develop, up to the pitchfork's median line. In this case, we formed a movement only in the first part, and as we exit our set, the Andrews pitchfork, there's a risk that we might see a reversal. This is the basis for us to build a new set. And what you need to remember is that building a new set equals closing the trade if you're currently in one. The same thing will happen if the situation develops within the Schiff pitchfork. Let's assume that the movement turned out to be weaker, and our classic Andrews pitchfork doesn't work here. We take the Schiff pitchfork, plot it on the chart, and monitor it. So in the same way, as soon as the price goes outside the boundaries, we understand that the trend has changed. Similarly, we'll make a decision if the price has formed a movement in the second half. That is, if we find that the price is consolidated in the second half of the structure and continues to develop, but at some point reverses. We don't need to wait until we necessarily exit this set. A simple exit through the median, through the middle channel, will be enough to give us a signal of a potential reversal. Consequently, this way you'll be able to get a reversal signal much earlier. Actually, I should mention that below this video, there's a link to my manual, an instruction guide, a PDF, files where I've explained in simple terms how I find trades and in which locations so that they're profitable. So, if you're interested in boosting your trading even further, check it out. Download it, use it, it's completely free, and I'll be happy if it helps you. And that's all for me. Bye.